Wouldn't it be great if there was a reoccurring market cycle that was not only profitable, easily identifiable, but also rules-based? Ladies and gentlemen, in this video, I'm going to show you everything that you need to know about the 3-day cycle, so that way you can begin to implement it into your trading careers. Whether you're new to trading, advanced, or maybe somewhere in between, I promise this information is for you. Stick around until the end and enjoy the rest of the video. Before I begin, down in the description below is the link to this slideshow. You can do whatever you'd like with it, download it, follow along, print it off. I just want to let you know that it's down there. To start, what is the 3-day cycle? The 3-day cycle is a continuous, recurring market cycle. Can be traded independently or in combination with signal days such as first red day, first green day, inside days, 3 days of breakout traders in the market, etc. Each day has certain characteristics and trade setups that are associated with each day. And of course, we'll be getting into those in detail later on. Some frequently asked questions about the 3-day cycle are, does it restart on Monday? So if Friday was day 3 or day 1 or whatever it is, does Monday automatically reset the cycle? No, absolutely no, it does not. And does the 3-day cycle continue from last week? The answer is yes. Some of you longtime subscribers may recognize this slide. I've done a few little adjustments, but it is still one of the most important slides that I could ever show through any of my presentations. These are 3 very different things. Now, they can all be traded as one big strategy, or you can trade each individual piece of the puzzle, okay? 3-day setups using signal days. Kind of talked a little bit about that in the first slide, such as inside day, first red day, first green day, etc. Or you can trade the day count, the weekly templates, Monday, day 1, Tuesday, day 2, Wednesday, day 3, resets back to day 1, Thursday, day 2, Friday, day 3. So that is the weekly templates. Or you can trade the 3-day cycle. And that is failed breakouts, high, low of the current week. That initiates day 1. Also, a trending market will, of course, initiate day 1 on day 3. I'm going to go into all of that very heavily in detail with pictures here soon. Before I continue, I would be doing you a huge injustice if I did not first define failed breakouts and false break reversals. Firstly, a failed breakout. A failed breakout is a solid candle closure above or below a previous day's high or low, in which they trade above, solid candle closure, and then somewhere along the way it comes back inside of that range, and then the entire day closes. This is the end of the day. Once this day ends and they have closed back inside of that range, that is considered a failed breakout. Something that I want to point out is that my analysis is all done on the 15-minute chart. So I don't care about solid candle closure on the 1-minute or the 5-minute. I only care about the 15-minute chart for my analysis. I use it to help identify failed breakout at high, low of the week in order to restart the 3-day cycle, using this level, the previous day's high and low. On the other hand, a false break reversal could be, or is, on the 15-minute chart when a wick travels through one of these levels, but there are no solid candle closures below. That means that there is no failed breakout, and therefore it has nothing to do with the 3-day cycle. It doesn't restart it. It does not do anything to the 3-day cycle. Starting all the way at the beginning, this is a crawl, walk, run. We're going to learn how to find day 1 in the 3-day cycle. And that can be done a few different ways. Scenario 1, you have a failed breakout at the high or low of the current week, above or below the previous day's high or low. Breakout failure occurs on the same day. That's big, okay? I should have probably highlighted this. Breakout failure occurs on the same day. So we have our daily separators with these little dotted lines here, and then we have our previous day's low down here. This Tuesday is the low of the current week, and we have now closed below that with solid candle closure, and then the day closed back inside of this range. That means that a breakout has occurred and then failed within the same day. That will restart the 3-day cycle, and this will become day 1 of that cycle. Scenario 2. A breakout occurs below or above a previous day's high or low and fails on the following day. In this instance here, we have Thursday breaking out below Wednesday's low, and on the following day, on this Friday, the breakout has now failed and closed back inside of that range. That would mean that Thursday becomes day 1 of the 3-day cycle, and Friday becomes day 2 of the 3-day cycle. This, of course, is all occurring at the low of the current week. Scenario 3 is the trending model of the 3-day cycle. In the trending model of the 3-day cycle, in this instance here, you can see a failed breakout causing day 1 back here on this Thursday. We had a day 2 on Friday and a day 3 on Monday. There was no breakout that failed at the high or low of the week on this Monday. They just broke out and continued to trend. Therefore, that day 3 would then become day 1 of the 3-day cycle, and we will start over with day 2 on Tuesday, day 3 on Wednesday, and we will continue to do this until we have a breakout fail at the high of the current week. It does not matter what day that breakout fails. It could be day 2, it could be day 3, but once it fails at the high or low of the week, you will have your new day 1 in the 3-day cycle. Just to reiterate one last time, in a trending model, if you have a day 3 that is broke out and not reversed, that day 3 will simply become day 1. Now, there's a few little caveats and a little additional rules that you need to be aware of with the 3-day cycle, and I'm going to explain those now. Day 3, if day 3 occurs on an inside day, in this example down here, and I'm going to make it a larger picture so you can see it better, I promise. Notice that we have day 2 and then day 3. When the day starts, it is day 3 in the 3-day cycle. This day does not hit the previous day's high or the previous day's low, not even with a wick. Therefore, that day 3 becomes an inside day. Day 3 is the only day in the 3-day cycle in which, if it is an inside day, that you could pause the cycle and you have to shift day 3 over to the next day. But here is the picture again. We have day 1, day 2, day 3 occurs, and the day closes, and we haven't hit the previous day's high or low. No big deal. We just shift that day 3 over to the next day, and when this day begins trading, we know today is still day 3 in the 3-day cycle. Another commonly asked question is, Cameron, if day 2 is an inside day, then what happens with the cycle? Nothing. If day 2 becomes an inside day, the next day will be day 3 of the 3-day cycle. Real quick though, I do want to point out that an inside day, it doesn't matter if you're on the 1-minute chart, the 30-second chart, it could be the 1-second chart. If price touches or goes above one of these levels, it is no longer an inside day. I'll repeat that again. If price at any point ever goes above the previous day's high or low in any way, it could be a wick, it could be a solid candle closure. If it goes above or below those levels, it is no longer an inside day. This channel is getting unbelievably close to 10,000 subscribers. So please hit the button. Words mean something and details matter. Understanding the 3-day cycle is very simple, but there's a lot of little itty bitty things that people wonder and it confuses them, but I promise you it's very simple. A wick to the high or the low of the previous day, even if it's at the high or low of the week, does not restart the 3-day cycle. So if we get a false break at the low of the week, not a failed breakout, but a false break, remember I said the wicks touching the previous day's level, this will not in itself restart the cycle. You need that solid candle closure below and then the breakout to fail. Continuing on with some minute, small details that could become confusing. And looking at my very professionally drawn little drawings down here, we have the high of the current week and the previous day's high. And imagine price has broke out solid candle closure above current week's high and then closed in between the previous day's high and the current high of the week. They have not gone back down below the previous day's high. That will not restart the cycle. That will not restart the cycle. But if they break out above both and then close below both, that will restart the cycle. And if you were to just flip this over, it would be the same scenario, but at the low of the week. A bit of a continuation from my previous slide. Slightly different scenario, but the same exact concept. We have the current high of week right here, and you can see right here where prices broke out of a previous day's high and then failed on the following day. That will not restart the cycle. You have to break above both. You have to be at the high of the week or the low of the week, as well as break out above a previous day's high or low, and then close back inside of that breakout level. This instance right here will not restart the 3-day cycle. Another small detail. On a Monday, you have no other range to go off of other than Friday's high and low. Which means if a breakout occurs on a Monday above or below the previous day's high and low from Friday, and then that breakout fails, technically that is a breakout that has failed at the high or the low of the current week. Therefore, that will restart the cycle. And I want to reiterate, this is only on a Monday because you have nothing else to go off of other than Friday's range. Now we start to get into a little bit of the bread and butter. All of those previous details are huge. They're extremely important. And if you feel like maybe I was going a little bit fast, rewind the video, watch it a few more times, look at the slideshow. Those are really important things to identify within the 3-day cycle, because day one, if you can't find day one, you're never going to understand day 2 and 3. So let's get into now some day 2 of the 3-day cycle characteristics. Day 2 in the 3-day cycle can turn into a first red day, a first green day, an inside day. But typically what I look for on day 2 of the 3-day cycle are these trending days. Day 2 setups are going to consist of parabolic trend trades, short or long squeeze trade setups. This is the presentation, the only 2 styles of presentation that I want to see out of the market on a day 2 setup. Day 2 reversal, they're less common, but they are still important. Day 2 of the 3-day cycle, I'm going to show pictures, but there will a lot of times be a breakout in which they reach the average daily range. Maybe you get 3 pushes out of the range, so out of consolidation, out of the previous day's high or the previous day's low on day 2, and you're coming into the session, maybe there's already been 3 pushes out of that range. Again, I'm about to show you some pictures. That will still come in the form of a parabolic trend trade or a short or long squeeze. Breakout level must not have been tested. Breakout level is the target, okay? That is for a day 2 reversal. All of these setups are laid out with certain criteria and rules that I have in previous videos. But for the purpose of this, I'm just going to run through it and show you what a parabolic trend trade on day 2 of the 3-day cycle could look like. We have a large dump. That's part of it. We have a breakout fail at the low of the week, which means day 1 of the 3-day cycle. Additionally, we have a high formed and a breakout to the upside, giving us a break in structure to the upside. We also have peak formation high, peak formation low, consolidation in between with ascending support. They split the range, break out, pull back, and go into the parabolic trending channel just prior to the New York session for the parabolic trend trade. This is exactly how it should look. This is the setup. The criteria is everything that I just laid out for you. I just don't have the words actually up on the screen. And additionally, if I were to flip this over, it would be considered a capitulation style of trend trade where you would be looking to short it to the downside. Typically, my goal is to trade the 3-day cycle in the direction of the peak formation. In this case here, you can see that we have a peak formation at the low of the week, which means on the following day, I would have liked to take a trend trade long. Thing is, market structure never confirmed that that long was acceptable. And I will always draw my little failed breakout level across, because in a lot of cases you will notice that it fails to go higher or lower and then starts trading below that level again, making lower lows and lower highs. So this can really catch a lot of people off guard because they're trying to take this trade long, but market structure has not said, hey, we're going up. It just continues making lower lows and lower highs, and people are getting caught chasing this move in the wrong direction. In this instance here, you can see on day 2, like I said, you're trying to take it in the direction of the peak formation, but you need to be aware of other factors, such as where's volume trapped, market structure, who's in the money, where are higher time frame traders trapped, etc., etc. This is an example of a day 2 trend trade with a long squeeze or a short squeeze presentation. I have a video with all of this criteria for this setup on my YouTube channel. You just have to go find it, but it has a slideshow similar to this one with all the information you could possibly need on this setup and how it presents. But for the purpose of this video, I'm going to re-explain it. We have a breakout that fails at the high of the week, giving us day 1 of the 3-day cycle. And unlike the last scenario I showed you in the last slide, this one does have a break of market structure to the downside. In that instance, based off of my entry criteria, I look for 3 drives out of consolidation, back up into the high, and the timing window to kick in. This is the London window. So this worked out really well. Now, for a long squeeze, once they make this lower low, they have now broken more structure to the downside. You can again look for 3 pushes back up into the daily range for a low-hanging fruit down the rest of the way. Here you can see they break to the downside and 1, 2, 3 candles and an engulfment coming into the New York window for the low-hanging fruit back through previous day's low for a range expansion of that day. What the long squeeze or the short squeeze is in its simplest form is if you get a lower low, lower high, lower low, you could just be looking for 3 pushes back up into the high. That could be considered a long squeeze. Or you have a high, a lower low, and then a lower high. So basically once you get that lower low, you're looking for the lower high. If the market was going down and you got a higher high, you would then just be looking for a higher low to be formed. That would be a short squeeze. This is a long squeeze. Earlier I spoke about day 2 reversals being a little bit less common, but they can still be very profitable if you know exactly what to look for. In this example here, I really don't care what day of the 3-day cycle this was. This could have been day 3. I'm only using this for an example, okay? Just forget about what happened over here. I don't care. This day 2 is just a theory, all right? If this was day 2 and this same scenario played out, phenomenal, okay? It's the same exact thing. I only used it because of the pattern. We have a breakout level that has not been retested throughout the entire day. They broke out very early in the day, and they've done 3 drives out of consolidation because remember, the previous day's high and low, all of this consolidation in the middle is exactly what I just said. All price movement in between a high and a low is consolidation. So once they come out of the previous day's high, they are now driving out of consolidation. Notice they've done 3 drives out of consolidation and broken to the downside. This gives us the opportunity for the pump and dump setup. And the whole premise and idea behind this is if this breakout level has not been retested, then there's a good chance that that's where they could be going. And you can use that as a profit target if there's enough space between where price currently is and that breakout level. And I told you that every single example is either going to present itself as a short or long squeeze or a parabolic trend trade, and this example is no different. Higher highs, higher lows, then you finally get a lower low and 3 pushes back into the high. That is a long squeeze setup for the trade back down towards that breakout level. After day 2 comes day 3 in the 3-day cycle, and these are some of the characteristics. Day 3 of the 3-day cycle will become day 1 in 2 different ways. Understanding these reasons is super important on making day 3 decisions. The 2 ways that it can become day 1 are trend or reversal. On day 3, the market breaks out of previous day's high or low and stays broken out. Day 3 becomes day 1. On the following day, I consider the market structure and trap volume to be of the utmost importance. Please go back and read that a few more times. Are traders trapped at the high or low of the week? I draw my breakout level as an area where the market may be trapping volume above or below a previous day's high or low at the high or low of the week. If the market appears to, based off timing and market structure, to be about to continue the trend, I will trade it as a trend trade. That would be a day 3 trend trade. For a reversal, 2 different ways. The market breaks out and fails on the same day, or the market breaks out and fails on the following day. So if day 3 happens, it breaks out, goes into consolidation. On the next day, you can still be thinking about day 3 reversal trades if you're at the high or low of the week. I'll say that again. If you break out at the low or high of the week, and then it goes into consolidation on day 3, and then on the following day, market structure confirms that you're going to get a reversal or the potential for a reversal is there, you could still trade that trade like a day 3 reversal based on trap volume at the high or low of the week. Here are some examples of day 3 trading setups. The setup: day 3 trend trade, day 3 reversal. Market presentation, you already know what they are: parabolic short squeeze or long squeeze, or a parabolic trend trade. Those are the only two scenarios that I'm looking for. Considerations from low of week or high of week. Those are the places that you are looking for either a day 3 trend trade or a day 3 reversal. Some of the considerations for those are: where's the volume trapped, market structure confirming the reversal thesis. If you're going up and market structure is making higher highs and higher lows, just because you want the trade to be a reversal doesn't mean that it will. You have to look for signs that the market could be reversing in your timing window. If it is a trend trade, has the market made a new extreme, and is it jamming back into the low or the high for the trend trade, a short squeeze or a long squeeze? And of course, I would not leave you hanging without pictures. Over here on Monday, you can see we have a breakout fail at the high of the current week, giving us day 1 of the 3-day cycle. On Tuesday, we have day 2, 3-day cycle. And on day 3 of the 3-day cycle, they have gone down and put a lower low in place, which means they are continuing the trend. The potential for them to continue the trend is still there. After they make the lower low, they give you 3 drives out of consolidation for the short continuation trade on day 3 of the 3-day cycle. This is a high of day trend trade, like I said, on day 3 of the 3-day cycle. Here is what a day 3 reversal trade looks like. I kind of did a bunch of hand motions and talked about trap volume about 3 slides ago, but here's a great picture of what I was referring to. We have day 1 3-day cycle, day 2 3-day cycle. Notice that they break out at the low of the current week and they go into consolidation. So now we have a consolidation under a breakout level, a break in structure to the upside, volume trapped now at the low of the current week on a Friday for a parabolic short squeeze back up towards the high of the week. Volume trapped, low of week, market structure is confirming. Once they make that higher high, look for the drives back into the low and for your timing window to kick in for your trading setup. If you look at this example, this is a day 3 reversal where there is volume trapped within the current day that reversed and closed below the breakout level, which means that we have a breakout that has now failed at the high of the current week on day 3 of the 3-day cycle, giving us now day 1. Why do I think that this trade worked out? Well, we have day 1 3-day cycle over here based on volume trapped down low. They broke out. On the following day, it failed. One of the scenarios that I gave you earlier in the slideshow. So day 1, day 2 3-day cycle on this Friday. They come out of consolidation in 1, 2, 3 drives back to the high. On day 3 of the 3-day cycle, you have this nice half Batman. We got the little ear. Here's the head and the nose and the capitulation back down. If you notice, this was a lower low, and then they've just come up and put in a higher high, which means this was more than likely a stop hunt back into the people that got the long correct. Notice the parabolic trend trade style channel right here and the capitulation immediately following it back down towards the low of the previous week. And I'm going to revisit just a very simple topic just because it is so beneficial to have this understanding in your trading toolbox. Defining consolidation seems like such a simple thing, but everything in between a high and a low. So think about the previous day's high and low. Anything between a high and a low is consolidation. All of those little swings up and down, that is all consolidation. So if they come out of consolidation, previous day's high and low, and they come out in a certain manner, you might be looking at a really great 3-push pattern within the day, or if it continues throughout the week coming out of the opening range, you might have a larger trade setup forming for that week. And this is exactly what I'm talking about. You have a previous day's high right here. I already showed this example, but I just want to kind of reiterate and show it so that you maybe can open your eyes a little bit more to seeing this pattern so you can stop missing great opportunities like this one. Consolidation, previous day's high. They come out 1, 2, 3 jabs to the high out of consolidation for the reversal. And that really is everything that you need to know about the 3-day cycle. All of the rules, the characteristics of each day, the trade setups that are associated with each day, and I even threw in a few extra little things here and there just to add value where I can. Ladies and gentlemen, I hope that you've enjoyed this video. If you have, do me a huge favor, hit that like button, subscribe if you haven't already. You'll have a wonderful day.